It's been 11 months since Alibaba hit its all-time high of $319 a share. Since then, it's fell all the way down to $144 a share and is floating around right now in the $150 range. So it goes without being said, Alibaba has definitely been a falling knife over the last 11 months, and I felt susceptible and I ended up buying shares and started averaging into it. The big question is, what do you do now? And if you're a new investor, should I buy now? So for those who bought at the all-time high, you're down over 50% at this point, and that's a lot of red in your portfolio, especially on one position. So the question you have to ask yourself, is this a reasonable position size in comparison to my total portfolio? And kind of weigh the risk and reward of Alibaba itself. There's lots of valuations out there. I have a stock analysis. I'll go ahead and link it here. But one of the things for me personally, I saw a nice buying opportunity in the 220 range, and that's when I started buying. It consolidated for a few months around the 200s, 210 to 220, and then we've had this big drop from around the 200s all the way down to 150 where it currently sits. Now, if we look back at support levels, and I did a video on that not too long ago, it blew right past the 180, then the 170, then we went all the way down to our 150, and it broke that and went all the way down to 144. The next level of support we're looking at is at $132, and that was December 21st of 2018. So several years have been wiped out, almost several years. I mean, what is this? 1, 2, 3, 2.5 years have been wiped out here thus far and where we currently sit. And if we break 132, which I really hope it doesn't happen, but the next level of support is back in 2017, almost 5 years ago, December 30th at $87, $86 here. So, if we do break this 132, there's a lot more red to be had here. So that is one of the biggest risks if you are looking to get into Alibaba as a new position. You have to be willing to know that if it breaks 132, which is the next support level, could go into that high $80 range, which is just crazy. Now, the positive news in all that is that you're getting a very good company at a very good valuation. I thought they were a good buy at 220. I think they're an even better buy at where there's currently trading at the 150 range. If they get down to 80, I will probably sell some more positions to free up some capital and invest at that range as well. And honestly, I'm going to be doing it probably $20 increments as we go in. So if it drops into 130, I'm going to go in another lot, 110, go in another lot, and then at 90, probably initiate another lot as well, if it comes to that. Let me know what you think about Alibaba in the comments below. Please hit that like button and consider subscribing. Now back to the content. Now in my portfolio, I have Alibaba in a long position at least 5 years, so I'm not really too concerned about the price movement. In fact, that's why I buy, and I've been averaging my position, my cost basis down. But if you're on more of a short-term basis or you want to kind of have the trade here are a few strategies that I would suggest. Now, for those who are looking for more of a short-term play, trying to find a way to benefit off the volatility of BABA, there have been so many 5% swings in price on the downside and on the upside. So, I would say if you saw 2 to 3 red days, you're probably going to have a positive day. I've seen this consistently on the way down. And the further it gets down, the more I think there is on the upside. That's why I'm more of a long-term position on Alibaba. However, if you are playing short-term, there is a lot of volatility with this stock. You're going to play heavily with options because of the volatility in the name. And at this point, I can't really guarantee, really no one could guarantee how long it's going to take to make the position move to 200 or to 300. I imagine when the stock does start to go up, it's going to go up rapidly. But as you can tell, it's going to go up as rapidly as it went down. I mean, just look from July to, just look at this huge price swing from 200 all the way down, $40, taken off, how much is that? 20% within 2 weeks. So incredible swings here. And so if you are playing options, you really are, I feel like, really risking, severe losses here if you are going in big. I think going in and out really rapidly on days where it's bled a lot and then entering the next day, to see if it catches an upside. You could benefit off of that, but you do have to be careful on that strategy as well. If you are doing short-term plays like that, entering for a day and exiting maybe the next day or within a couple hours, just know that you need to have a risk level, kind of identified before you enter into the position. So if you actually catch it on another red day, you know when to sell, and then maybe plan on entering back into the next day to catch the upside. But here's the deal. You just have to know what your risk level is, and you have to be consistent. So if you say you're going to do something, do it. Be flexible, but don't just go into the behavioral, the behavioral flaw of just saying, I'm just going to keep buying and buying and buying. And that'll definitely burn you on options if you keep buying options out of the money. So just be careful there on options, and be careful there and just be smart about what level of risk you're taking. For me personally, I don't feel really bad about this position at all because, again, 5 years, Alibaba is going to recover. The worries in China are going to fade over time, especially the immediate ones, the acute ones about Alipay, about all of China regulation, DD concerns. Jack Ma was a problem. They had the fine. There's the Evergrande that just, Evergrande story that everybody was, freaking out about. And, some of this stuff is overblown. Some of it is, relevant concern. But there's just a lot of fear surrounding China right now. And Alibaba is getting, one of the best companies in China, and they're really getting beat up. And I don't think China is going to do anything detrimental to China while they have this Evergrande situation, playing out. Alibaba has great books, Evergrande, terrible books. I mean, what are you going to do? If you get rid of you do something detrimental to the best company in China, you're never going to get a U.S. or foreign investor ever again in China. And so I feel like that is one of the key things that people don't talk about enough is if they hurt Alibaba too much, it's going to spook so many investors. So yes, Alibaba has been a falling knife in the last 11 months since they hit their all-time high. But that doesn't mean Alibaba is a bad company. It doesn't mean they're not a good value. They're an incredible value right now. Go out there, look. This isn't a stock analysis. This is just saying, look, I'm admitting that it was a falling knife. I caught it on the way down, and I still have a strategy to buy more as it continues to fall. Hopefully what we see is consolidation in the next 6 months. There does need to be some level of sentiment change around China before that to happen. Until then, we'll have to wait and see what happens. Again, Alibaba is an incredible value at this moment. We just need things to change with China. Investors will start to come back in, and so will institutional investors. And when we see that, it's going to pick up very, very quickly. Let me know what you think about Alibaba in the comments below. Hit that like button, it helps me out. Also, please consider subscribing. I do videos on investing, personal finance, and I do stock analysis videos as well. Thanks so much for watching. Frank Finance, out.